Tesla just released their earnings yesterday, and guess what? The earnings are actually looking really good. Just last month, all the so-called Tesla bulls were complaining about Elon getting distracted with Twitter, and they demanded a stock buyback. Everyone was concerned that the demand for Tesla cars was going down, causing the stock price to crash all the way to $100. Painful, yeah? But now, the stock has gone back up almost 50% from the previous low. Possible. So, in this video, I want to go through the earnings result to see what are the numbers, what the company forecasts, and finally share what I think could happen to the stock going forward. Alright, let's start right now. Here's the financial summary for Q4 2022. Okay, for revenue, it's a bit hard to see the numbers here. So, here's a nicer looking chart from CNBC. Overall, Tesla revenue has gone up yet again. Automotive revenue went up to $21.3 billion and is still the largest part of their revenue, which still makes Tesla a car company for now. But what's really exciting is that you can see the two other segments, energy and services, are slowly becoming a bigger part. In the report, Tesla pointed out that they expected hardware-related profits to be accompanied with an acceleration of software-related profits. That's really important because over time, this will make Tesla less and less reliant on car sales to generate revenue. Overall, their total revenue has gone up to $24.32 billion, a 37% increase year over year. Automotive gross margin has continued to fall. Yes, it's bad that it has kept falling, and that is expected as Tesla continues to lower their car prices in order to boost demand. But the fact that it has such a high gross margin means that Tesla has a lot more room to lower the prices. When you compare this to other automakers like Ford, they can't really lower their prices because they are already losing money selling EV cars. So even though Tesla's gross margin is falling, they still have a lot of buffer for it. Operating expenses grew a bit quarter over quarter, but it's lower by negative 16% year over year. So that's good. Income from operations is at an all-time high. Operating margin is down from the last quarter, but still up year over year. Earnings per share came in at $1.19, which beat estimates of $1.13. So that's fantastic. Free cash flow came in at $1.4 billion, which was a huge drop compared to the last quarter. That's also why when all the so-called Tesla bulls asked for a stock buyback, my reply was, buy back your head lah. With Tesla, a company that's growing so fast and we are now entering a recession, a stock buyback would be the stupidest thing to do. With cash, you can build new factories, hire more team members, build more superchargers, improve your battery technology, come up with an AI bot, and the list goes on and on. You don't need a stock buyback to push the stock price back up. Because as Tesla continues to improve and innovate, the stock price will automatically go up by itself, like magic. Okay, here's the summary. There was growth in vehicle deliveries, growth in other parts of the business, increase in average selling price year over year. The bad news is that there was a negative foreign currency impact of $1.4 billion, mainly because the USD was going sea-based strong in 2022. But thankfully, it started to come back down. There was a FSD revenue recognition of $324 million in automotive sales. Without that, we will be seeing a slightly lower automotive revenue. Additionally, they expect to recognize another $1 billion in deferred revenue in the future. As for negatives, Tesla profitability has gone down due to higher raw material, commodity, logistics, and warranty costs. They spent a lot more money to ramp up the production of battery cells. And again, there was an FX impact of $300 million. Quick pause. Tiger Brokers is now offering a very generous sign-up offer. They are now giving out 1 free GoPro share, 3 days 20% U coupon, a 0.88 HP stock fractional share, and lucky draw to win a stock worth up to 1 free Apple stock. To qualify, all you need to do is deposit $1,000 and make 5 buy trades, and you will get all those rewards. So, if you are interested, you can sign up using my link down below. With that being said, let's get back to the video. Okay, that's all for the financial statement. Now, for more exciting stuff, Giga Texas is now in the tooling phase for Cybertruck, and they will finally start production somewhere in the summer of this year. What? But don't be happy yet, because mass production will only start next year, so it won't contribute significantly to the bottom line yet. As for the Tesla Semi, we will need to wait for a while before they can start to mass produce the truck. In the meantime, here's a pretty photo of the truck. Next, full self-driving. Cumulative miles driven has continued to go up. Tesla has now released FSD beta to nearly all the customers in the US and Canada, about 400,000 of them. Tesla vehicles which are using autopilot are way safer than those who are not using autopilot. And you can see that over time, vehicles using autopilot are actually experiencing fewer accidents. During the earnings call, Elon said that they can't even see a second place competitor with a telescope. So, for those people who keep saying that BYD self-driving cars are winning Tesla, sorry Elon be like, I don't even know who you are. But jokes aside, Elon expects the next biggest competitor to come from the Chinese market. Next, insurance. There's no info on insurance in the report, but during the earnings call, they say that they are at the $300 million premium annual run rate, and is growing at 20% per quarter. On average, about 17% of customers are using Tesla insurance, and the number is going up. As for the outlook, Tesla mentioned that they are still planning to have a 50% growth rate in 2023, and they gave an estimate of 1.8 million cars for the year. But if you check the deliveries, it was 1.3 million cars this year. 1.8 divided by 1.3 is just 38%. So it's nowhere near the 50% growth target. Then Tesla be like, some years we may grow faster and some we may grow slower ma. So this 50% growth rate is just a long-term average. During the call, Elon said that if everything goes smoothly, they are actually able to deliver 2 million cars, which would be a 53% growth rate. But I guess they wanted to be careful and not set our expectations so high. So they told us to expect a 38% growth rate instead. Next, what about the demand for Tesla cars? According to Elon, he said that so far in January, they've seen the strongest orders year-to-date ever in history, almost 2 times the rate of production. Hence, he believes that demand will be good despite contraction in the auto market. As mentioned earlier, because Tesla has such a high gross margin, they are able to reduce prices to boost demand. And that is what they did. First, they cut car prices in China, and suddenly everyone wanted to buy a Tesla. Then recently, they cut prices in US and Europe by up to 1/5. And interestingly enough, when they saw that demand has gone back up, Tesla raised the price for their Model Y by $500 again. However, one thing I have to say is, it's hard to tell whether this boost in demand is just a one-off thing or will it actually last. Because there is some data that shows that after the price cuts, inventory in the US did go down. But now, it is starting to go back up again. So, let's see. In their report, Tesla hinted at a new product which is under development. When asked about it, Elon be like, I won't tell you what it is, but it will blow your mind. So I guess we will have to wait till Investor Day on March 1st to see what's the new product, or wait till someone leaks it out. But people are speculating that the next product could be a Tesla van, as not too long ago, Elon was tweeting about a robo-van. As you can see, the latest Q4 earnings are really solid. As I've said many times in the past, the stock is not the company. Yes, the stock can fall due to Twitter and Elon talking nonsense online, but that doesn't impact the company fundamentals by a lot. I'm still very amazed at how Tesla managed to deliver yet another record quarter, despite missing deliveries due to lower demand and the Shanghai factory shutdown. However, that doesn't mean that Tesla is safe yet, as in the short term, there's still a recession coming, demand for cars will continue to fall, and car loan interest rates are still going up. And all this will mean that Tesla will continue to suffer for a bit this year and maybe also next year. But over the long term, I continue to remain bullish in the company. And if anything, this recession will actually accelerate Tesla's growth as compared to other automakers, because Tesla is still way ahead compared to all of its competitors, both in terms of hardware and software. Anyway, that's all for this video. Hopefully, you find it useful. Like, share and subscribe, as I'll be posting new videos every Monday, Wednesday and Friday.